from the Batcave.
Hey, we've had closets. We've had a cell.
Hey,
we've had everything.
Jake, I'm out of the closet, just for the record.
That's true.
Mike's in the attic now.
Yeah, that's my bedroom is in the attic, so I'm up. I ran away from my kids.
And we're live. It happened surprisingly quickly that time. It's Value After Hours, joined by Mike Mitchell, Bill Brewster, Jake Taylor. What's happening, fellas?
Life is good.
Back in New York.
Mike, tell us a little bit about the lumber market, please.
Yeah, so I could go on and on about the lumber market. Today's news.
It's only an hour show.
What's happened?
Yeah, I know. Okay, so you really got to go back to the 60s. It's a tariff issue. No, I'm kidding. We're not going to the 60s. Yeah, no, that the lumber market. There's rumors out there that there's some stabilization, which would just be, for me, if we found some price stability in the 700s. This will be the last show I do that's not on a NetJets. So
I called Mike this morning to say hello, and he's like, "Oh, you're calling me to tell me that the weather is really, really hot, and as a consequence, some of the mills have shut down. I really appreciate you looking out.
Yeah.
Thank you."
Yeah, that's
oh my.
You've seen some price stability today because the BC temperatures are north of 100, which makes it really hard to produce. So there's some scrambling going on. It's actually that topic. We don't have to talk about lumber, but that was my observation from the weekend. I don't know how much. I was in Colorado on the weekend. I don't know how much traveling you guys have done, but it's really. In the town that I go to, Salida, it's busier by 50% than I've ever seen it. I've been going there for 10 years. It's like out of control. I mean, there's so many people around. It kind of blew my mind, which was the topic I was more interested in. But if you're a mill or a supplier or a home builder, I think the question you're asking yourself right now is, everybody's on vacation. What happens in September, right? So school comes back. Does the job market come back? Does housing pick up again? What does that do? And so now imagine you're a supplier and you're trying to decide if you buy into that. If the mill's shut down, then it's like you want to get your supply locked up now, right? In case that comes back and you don't know when you're going to get the wood. So I appreciate you calling me to talk about that this morning, Bill. That was very helpful. My wife's
top
tired
of mind
of
for
me.
It. Top of mind for me, for sure. Dude, I'll tell you what, I have been around. I've been raging in Chicago, so I have a pretty good sample size of what this city is like. The service is just atrocious because nobody is working. And like my boy, who has run a restaurant now for like close to 20 years, shout out to Carson's. Like he's making salads. He can't get people to make salads. Like he's the salad line. He's working like a dog. He's 7 days a week. I go in to see him. I can't even see him. And he's like, dude, I don't know what to tell you. Like, we got to make the food and no one is here.
Right. Well, in Colorado, the service was good. I mean, they were meeting the demand, but what I noticed was everywhere had a help wanted sign, everywhere. And the wages that they were offering for mundane jobs blew me away. So that the first one I saw when I got to town is to go to Safeway, and they were looking for an overnight stalker, like a grocery, shelf stalker, which means no education at all required. Like just put this here, put this here. It was $20 an hour. The butcher, they're looking for a butcher, $21 an hour. The pizza place, which had excellent service. Shout out to Moonlight Pizza in Salida. You guys are amazing. The pizza place in Salida had great service, but they had help wanted offering, no joke, only time I've ever seen this posted in a restaurant, 401k and healthcare benefits to their employees for a pizza place. 1 unit pizza place in Salida were offering that. Kind of blew me away. But I think in Colorado, what's happening is the people who have the jobs are they're working 7 days a week. They're working all the shifts. So they're doing, and I saw the same people when I went to the same places. I think people are just working their nuts off, including the ladies. I mean, metaphorically, obviously, but they're just
asses. They can work
working
their
asses off.
Yeah,
Thank you.
We all have asses.
They're working.
Yeah.
We all do.
I used to. I should do more squats.
They're just working very hard, and you got to think that, like, for them, they're probably cleaning up, right? I mean, you're making $20 an hour, and you take your shifts from 40 to 60 hours. Like it's a boon. So it'll be interesting to me to see. When I left, I was thinking, one, there are jobs everywhere, and there are relatively high paying jobs with like little barrier. You don't need an education to get these jobs. And I also was sort of wondering, how many people are staring at that job going, you know what, I'm just going to keep hanging out with my kids. I mean, even the national park. So I normally see 2-3 tents, 1 or 2 campers. There's 100 people. I mean, like, it was insane. It was crazy. So I kind of wonder how many people are like, look, I haven't been on vacation 18 months. I'm out. My kids are out of school. They're going back to school in the fall. Like, let's just go vacation, take a break. And then in September, when kids go back to school, how many of those jobs will get filled? It'll be interesting to see. My guess is probably a lot. I mean, $20 an hour, if you don't have any money, that's the easiest job in the world to take. So
do you think it's a product of the last 18 months being just incredibly stressful with COVID and quarantine? And then in addition to that, if you can work from home, which many of us can, you've just probably had longer hours than you've ever had before, because getting rid of the commute just got rid of the time you spent in the car. You just worked during that time.
Yeah, I mean, for me, this was the first time I had been out since prior to the COVID lockdowns, and so I was just happy to be away. I mean, I just be away from my kids for a little bit, and I love them; they're wonderful children. But being away from my wife is watching, they're the best kids on the planet. But being away from them was exciting, and seeing my friends, I hadn't seen them in 2 years, and so I imagine there's this like that. I think that pent up demand conversation is very real. So the question for me is, what happens when that pent up demand kind of blows through the system, which it will. I mean, for families anyway, it's going to when school starts again. I mean, it's very like fixed. It can't go on forever. Your kids are going to have to go to school. And a lot of the schools, I know in some places they haven't opened, but in Texas, they're going to be fully open. Florida for Bill, they're going to be fully open.
Never closed.
Yeah.
That's right.
So, yeah.
I'm a little worried about this Delta variant, though. That could throw.
Yeah,
I've heard some
concerning. I've heard some concerning things in the physician circles on
Seems
Delta.
like you don't get that sick. So, but now Google's going to demonetize us for disinformation campaigns.
Just a matter of time.
Sorry.
Yeah, I've heard. I'll take my knowledge of Delta variant offline, so I don't get backlash from YouTube.
That's a good idea.
Do you think that the money that's going to be spent during this period, combined with the fact that I still see shortages everywhere I go. I was trying to buy some barefoot shoes, and just about every single color in every single size is sold out. I was kind of.
What were you trying to buy?
Those barefoot shoes? They're like very thin. You can like the idea is that it's better for your feet rather than wearing all the padding.
You're gonna rock the ones that got like toes and stuff on them?
No, not the toe ones. These ones are pretty good looking shoes. And so I contacted them. I said, when are they going to be back in stock? And they said October. Yeah. I was like, October. It's like, this bullshit. This thing will be over in 5 minutes. Like, I'm not going to want to buy them in about 6 minutes. So you need to fulfill that now.
That just reminded me of Top Gun when they asked for backup.
That's what I was saying.
Yeah, that's right. Yeah. Well done. Yeah, I don't know. I think this is I've said it before. I think this is what McMurtry was tweeting about last March about supply chains getting all screwed up. I think now we're actually living it. I don't know that he would have thought this necessarily, right, when he sent that, but this is a problem with just in time. When just in time just gets stopped, getting back to in time is really, really difficult, I think.
That's right. Especially when you have labor issues, right? A lot of this is like, I gotta hire a guy to go unload the port and then load it onto a truck and then to drive the truck. I mean, you need people, if people aren't.
Not to mention, dude, there are countries that are still locked down.
Yeah, that's right.
Yeah.
And you need those little fingers to make Toby's ballerina slippers.
But they look great.
They do. Yeah, they do. I have this deep-seated belief, and it's like I'm the ignorance is bliss guy. So when somebody poses this like supply chains are an issue and that's going to cause all kinds of disruptions, I just sort of sit back and say, capitalism fixes this. Capitalism solves this.
Mm-hmm.
Like, it's been solving it for hundreds of years. It's going to keep solving it.
But I had Bernard Horn of Polaris on my podcast. It's the one that's out now. I spoke to him. He had this interesting point where he said that we've never had this circumstance in the world before where every single manufacturer just stopped what they were doing, paid all of their payables, collected all of their receivables, and then just sat there for 3 months. And then 3 months later, they said, okay, now we need to get back to work. And everybody pressed the button at the same time. And it's created this kind of funny thing in the system where there is a lot of demand for some things like lumber, and there's not a lot of supply of other things. Like there's lots of things, lots of odd stuff just isn't available. And I don't know how that all plays out, but if anything is required in the series and it's not there, it just means it's not there available at the end. I guess that's an argument for the transitory inflation. But what then happens beyond that is sort of the more interesting question, I think.
I wouldn't be surprised to see us bounce off the other way too, like overproduction of a lot of things that, we're going to have glut of things it's just
masks.
Well, masks, yeah.
Hand sanitizer.
Sure. All of those, it's just a common, anytime like a system is trying to find equilibrium, it's going to probably swing back and forth across, where it should be. But I don't know, it'll
Which
be
is
messy.
the function of capitalism, right? To kind of like to overproduce and underproduce and try and find that. And it does it more efficiently than any kind of top-down system. But there's still waste in there, and there's still overshooting and undershooting. And we don't really know how long this one will take to correct.
Yeah, you're not wrong. It's like in a lot of things that average, the concept of average is just that. It's a concept. We don't live at average, right? We live at extremes.
Right.
It's markets live that way. Capitalism is that way. Supply chains are that way. We either have not enough or too much, and we sort of normalize it out, but we never live at normal, right? It's always too much or too little.
The thing that's wild is the 10-year is selling off. Like, I don't know. The bond market doesn't seem to think that there's a whole lot.
There's a finger on that scale though, right?
Not the 10-year.
That's what you don't think they're playing in the 10-year? Are they not?
I don't know enough to have an intelligent conversation about this, but I think that the Fed messes around on the short end of the curve, and the 10-year is such a deep market that I don't know that they can really like repress that.
Well,
I think I don't know why we would go to like, I guess the thing that's hard for me to understand is why we would go from like a slow growth, no growth world to all of a sudden this hyperinflation, growthy type world. I could see a scenario where like you have a step change up in price coming out of this because of the stimulus, but then I just think we go right back to like growth. Like, I don't see why, I guess, unless we then say like, well, this is going to be like perpetual government spending, which is very possible. But I also think that there's some sort of signals that the appetite's not there for that. But, maybe, who knows? I don't know. Just own equities.
Well, part of the 10-year issue is that
more money will flow to Disney.
Yeah, no, part of the issue is when you put a lot of money out there and you keep the short end really low. Everything pegs off the short end, right? And when you throw money into the system and you keep the short end really low, everybody starts chasing yield. So you get a lot of dollars, running after everything. And that's what keeps the rates down. And the only time you really see, and you're literally witnessing me get over my skis. So as I keep talking, you're seeing my head go right over the skis. But when you see that flip where rates start to get funky. So if you remember March of 2020, you would see the 10-year just like bombed, like it just bombed, and everybody wanted US dollars. There's times of real stress. And so that's why I look around and it really, I say real stress. Stress in the system, but it was a lot of lack of confidence. So I kind of look around and I'm like, well, there are a lot of things that could make people not confident, but right now there are none of those things. So what are they doing? They're like, you're trying to balance, you're stretching out on the curve a little bit, you're buying a little bit more risk, and you just have a lot of dollars to put to work. And and there's, by the way, there's more dollars being created every day. So I don't know. Again, that's where it kind of gets back to prior conversations we've had about, well, I'm bullish. And it's like, why? It's because I can't find a reason to be bearish. It's not because I'm so excited. It's just because I can't find a reason to be bearish. This is just so much money and so much, everybody wants to be involved. Everybody wants to put capital to work, and everybody's very confident. You add that together and it's like, well, asset prices are probably going higher.
In some ways, that's the underlying performance of the economy, but that can be divorced from what asset prices do through that. And the thing that I keep on saying it, and you guys all predicted this before we went on, but if I look at the forward returns now, they're like 0.5%, and that assumes the mean reversion over a decade. If you don't get the mean reversion, then you get the underlying growth in earnings, and that assumes we're at the same valuation in a decade from now, which who knows. That's as possible as going back to the mean. But if we're at the same level, then the forward returns here are like 5% a year, which is pretty modest.
Yeah.
It's like
Historically, that's very
10%
modest.
below the, I think, individual investor surveys I saw recently.
It was like 17, wasn't it?
17.
17.5% was the number that I saw. That's what everybody's expecting forward from here.
We can get that just loaning your Bitcoin, can't you? For
that
risk.
One's gonna be tough. Yeah,
No one
no
can
risk
borrow my
sales
No
pitch
risk.
on the Bitcoin. I never really understood. My mind always thinks if somebody's telling me that I can buy something and loan it out at 17%, my mind just immediately says, okay, well then the market's kind of telling you this currency is going to go down 17% over that term. Like I just don't believe in these free lunches.
Oh, they're everywhere. Free lunches are everywhere, Bill. You're just not looking hard enough.
That's fair.
If it's, I mean,
Didn't Corey mess around with that stuff? He got into doing that, didn't he? Like as a project for Pirates. Yeah, we gotta check in with him and see how that's going for him.
If somebody's promising you in this environment with a 10-year at 1.5 or 4, I have 1.6, I don't know where it is today, but if somebody's promising you 10 to 12%, I assure you, I haven't read any document, I assure you, you're taking a lot of risk. That I absolutely am certain of. What the risk is, I don't know, but I know you're taking a lot of risk if you're getting that kind of return in this environment.
Well, I see ARC funds are like 20, 25%, aren't they?
For what?
That's the expected return from here.
Oh,
well, I'm at like 23, but yeah, sure. Yeah. Okay. I don't know.
Not enough. Not enough. I need more.
Yeah, it seems tough to get double digits from here. That even I will say.
Yeah, I'm backing off of my personal target of 10% annual returns. I don't know if I'm going to be able to hit that going forward. That's a big number.
Just depends on how far you want to look out, I think. I mean, this too shall pass, but it may take a while to get to a reasonable return level again.
How do you set your personal return requirements? What are you basing that on?
For me?
Yeah, or anybody, but you raised it, so I'm interested in you first.
Oh yeah, so I just it's not more complicated. I just picked a number almost out of thin air. I mean, there wasn't any science to it. I just thought, as I looked at the world and what I've done in the past, and when I retired in end of 2018, early 2019, I just said, well, what's a very reasonable, a stretch target that's but also very reasonable. Like if you're into the game, you like security selection, what is a number at which you wouldn't underwrite below? And so for me, the number I wouldn't underwrite below is 10%. So if you do the math, and I'm not charging myself any fees. So, and by the way, the 10%, I have to, if I'm underwriting to 10, I've got to feel like extreme confidence in that 10, right? Because I don't even think you get a ton of margin safety at 10. When you start talking like 20% IRRs, and now I'm like, okay, so if it really doesn't go well, I'll probably still, even if the arrow lands well south of the bullseye, I'll still hit a pretty good number. So that's how I got there. Is I said, well, I'm not underwriting anything under 10. If it's under 10, I'm just going to hold cash. So that's how I got to 10. And I've always felt very strongly that I don't want to compare my own returns to a benchmark, and they're like the S&P, for example. So as I watched other funds do that, and LPs of the funds, more importantly, do that, what I noticed was the portfolio managers and the analysts, everybody was complicit in this. They start managing to the benchmark. And that is not how I personally operate, not how I wanted to operate. So the benchmark to me is irrelevant. I really, if you want the benchmark, just go buy the benchmark, right? It's not.
When you say they manage to the benchmark, do you mean the portfolio starts looking like the benchmark, or do you mean that when the market gets very expensive, they start the hurdle rate goes way down? Which, all things being equal, you probably want it the other way around.
Yeah, it's more of the former. Is that the portfolio construction is discussed in context of the S&P 500. And the issue that I'm not saying that's wrong. And in many cases, especially if you're selling yourself as like, look, don't give your money to the S&P 500, give it to me because I'm going to give you lower beta, or I'm going to give you less market risk and I'll give you the same, whatever. You can come up with better Sharpe ratio. I'm not saying that's bad. I'm just saying for me, if you look at the top components of the S&P 500, I have no view on them. And that's 25% of the index, 25% or some huge number. I don't know if it's that today or more or a little bit less, but it's the vast majority of your money is wrapped up in 5 securities that I have no view on. So you're asking me to compare the next investment opportunity I get to those 5 companies when I don't really know those companies. And by the way, not a knock on them. I'm sure they're phenomenal. I don't want to spend the time to learn those companies. It's just not something I want to do with my time. So that to me, when we'd get into meetings, with portfolio managers, co-portfolio managers, they'd say, well, the index makeup now is, I don't know, 10% tech and 5% energy and 3% mining. And I'm like, guys, to be honest, like, I don't give a flying fuck what the index is, but sorry, what the index is made up of. Like, who cares? Like, what idea do you have? Like, walk me through a stock pitch that you like and why you think it's going to work and why you think we're going to make good money on a risk adjusted basis. So in my mind, it just got very cloudy. Like, I'm a stock picker. I'm a business analyst. I'm not an index analyst. That's not what I do. So I think if I really compared, like, on a day-to-day basis, I looked at the S&P and I said, well, boy, the S&P is up 30 and I'm up 10. That's a disaster. Well, actually, for my family, being up 10 is pretty good. So, and if I don't outperform the S&P over time, like the conversation we were having last week, if I'm not matching the S&P over 5 years, it's like, what am I? I'll just go to the movies. Seriously, I'd rather play video games. I like picking stocks, but if I suck at it, it's not a problem. I'll just give my money to the S&P, pay like 10 basis points or whatever the ETF charges. And anyway, I'm like I said, I'm getting over skis here pretty quick. I think that's what most people should do, candidly. And if I underperform for long enough, that's exactly what I will do. But the comparison to the S&P makes no sense to me. I'm a, like, what's a good outcome? And if I double my money every 7 years, that's a pretty good outcome. Like, that's not a terrible. If that happens, I'm going to die on a NetJets that I will not have left for 5 years. I'll just be in the air like that. What's that movie, Contact, where the guy just lives in the air? That'll be me. I'll just be traveling between Tobias and Jake and Bill. I'll just be in this constant loop of,
I'll come get on that jet with
coffee. It's not a bad outcome, but that's how I got to 10.
Now, you raised some really good points with that. I think it's been interesting to watch the evolution of Berkshire and Buffett's hurdle rate over time. And, when they were smaller and it was earlier and maybe you could say better opportunity set just due to even just size constraints, they compounded at, I don't know, 23%-ish book value for a long stretch. And then as you've watched it go down over time, now he's willing to take an 8 to 10% kind of regulatory return from, huge deployments of capital into Mid-America or Berkshire Energy and the railroad. But then also the other thing that's interesting, I've been thinking a lot lately. I think I'm going to write about it for the next quarterly letter about how actually, there's this saying that he says that he's a better investor because he's a businessman and he's a better businessman because he's an investor. But I think you could also say that the insurance side of things has actually made him a much better investor, and that the links between insurance assessment and investing are actually quite strong. Yeah. And so to tie this back together, he says that, they're looking to aim for a 90% underwriting, basically, especially for like the super cat part of the business, where it can be very difficult to sort of match the premium today versus a really long tail of liability over time. So they're aiming for 90%, which is implied sort of a 10% hurdle. So it all kind of fits together in his mind, I think, in a similar way, where he has sort of this 10% hurdle now for any dollar that's in their deployment, whether it's, putting it into solar panels in Nevada, or whether it's, insurance against, an earthquake in LA. Like, it all kind of fits together into that same sort of 10% hurdle for him now.
10% feels like about right, but I think that he's always said he would buy a business at about 10 times, like roughly 10 times owner earnings, right? That's always been a private business. And then I think he's getting the return by assuming that they're better businesses than what he's paying for them at 10 times. They're worth a little bit more than that, or likely to grow a little bit faster than that.
In fairness, if you're putting the checks to work that he's putting to work and you get much more than 10, you stole it from someone. I mean, you really, and that's not his MO. He does not, because he wants
quite
people
good
to stick
then.
around. Yeah, exactly. I mean, he wants people to stick around. He wants to have minority owners, and the people who sell him his business, he likes it when they keep a stake and things. You really don't. Underwriting 10 and getting growth on top of that is that's a pretty good. That's not a bad outcome for Berkshire shareholders. And my guess is, the bigger he gets, the smaller that number is going to get over time. Certainly has been the case historically.
That's a difficult task in this market, though. I would have thought. I've just been playing around with a little bit. Like, I found you've got to creep it down to about 8% to kind of get the answers that you want in this market.
or lower, or lower.
Yeah.
8%'s a big number. I had 8% on those Curteps, and I was like the happy. I was like a pig in slop. I was so happy. I was buying those things at par, and even those are 6 and change now. I mean, they re-rated just like that. I mean, that's the market we're in. You know, it's 6. I'm like, it's good. Yeah, they're money good, but it's not 8.
The discount rate that you apply when you're looking at like this, I think about the discount rate as like the time value of money. Like you could be putting to something else. Like even that's like, I thought 8% was getting a little bit extreme, but I guess that in this market, like you're not going to find 8% anywhere else, anyway. And then to get at a discount to that, which is tough in this market again.
Yeah, I think you can build margin of safety in different ways. You can build it into your growth assumption. You can build it into your discount rate, or you can build it into the margin of safety of the price that you pay. Once you make the assessment of what you think it's worth. Now, I think it's probably better to use a consistent discount rate for any security that you're looking at, and then get your discount on the price after that. That's personally what I tend to. That's how my mind works. That way, at least you're comparing apples to apples.
Yeah.
Whereas if you start to monkey around with like, well, this seems riskier, so I'm going to use a higher discount rate for this stream of cash flow. I mean, that could be okay, but I think you're starting to introduce more bias then, and maybe you're not comparing apples to oranges as much at that point. I'd rather make it up somewhere else in the price.
Has Buffett said the 10-year? Have I imagined that? Was it 10-year plus whatever is appropriate for the risk of the business? Am I imagining that part?
No, he's said that before.
I think
He's used it.
That, yeah.
A 10-year plus, equity risk premium, for lack of he would never use that term because it's too academic, but it's effectively what I think he's talking about.
Yeah.
Do you think that whatever the 10-year or whatever the appropriate, whatever your risk-free rate, whatever you use in your mind as the risk-free rate, 10-year or the 30-year or whatever you use, do you think that's an accurate reflection of what the actual risk-free rate of return is in this market, or whatever you need to get above inflation, I guess, is the question?
Yeah. Are you willing to take a 1.5 for the 10-year when inflation's at 4 or whatever right now, right? Do you have a negative?
That's transitory.
Negative real?
It's transitory. Check.
Yeah. Okay. Sorry.
For me on that, it's a duration conversation. Like if you're saying 1.5% for a year, that sucks, but it's not the end of the world. I can re-rate if everything re-rates. But if you're telling me 1.5% for 10 years, the answer is no. I'd rather just own cash. That to me seems crazy. But if you're taking a swing for a year, okay, so if you've got the chance where you can buy it higher, that's fine. But if not,
because over a year you're not worried so much about the return on it. You just want it to be there, and the bolus to be mostly there at the end of the year. You're not trying to make any money. You just don't want it to go away.
That's right. You're not taking a risk.
And you're not going to trade down. You're not going to have any fucking weird thing happen with the bond. So if you need the money, you're probably going to be able to sell it at 99 cents on the dollar. It's not like you got to liquidate it for 60 or something because you're caught in the middle of the duration.
It actually makes you wonder too, if that's not the game everybody's playing, buying it at 1.5, is they're just like, yeah, I realize this is a 10-year credit, but I'm trading it for 3 months, and and so you wonder if people hit the exit, do they all hit the exit at the same time? Well,
dude, then you lever it, right?
Yeah. Oh yeah.
And that's how you get your return.
Sweet.
Maybe not the risk free, but you do it in a corporate or something where you think that you can get some spread. Seems to be how markets work these days.
Yeah.
Isn't that what kind of people do with their home mortgage, where they're like, I'm going to refinance this within 7 years, right? Like the average is, I think, under 7 years for a mortgage being refinanced. So it doesn't matter what the rate is that much. Doesn't matter if there's some big balloon payment. This is just sort of a rental of a mortgage.
Yeah. Well, everybody buys on debt service coverage, right? Nobody's buying like a number anymore. And it's the same with the government. We're never going to pay down the debt. You just got to make sure you grow the debt slower than you do GDP. And it's just one big levered equity strategy.
Have we been going on that front?
I don't know, man. I don't know. I think TBD. It'll either work or it won't. But
the only thing that can happen is you
just once.
Yeah, that's it. You can only blow it up, and then you just figure it out after that.
Yeah, Bitcoin solves some of this.
Probably all of it.
Crypto definitely solves it.
it's kind of why I'm sympathetic to the people that like Bitcoin. Like, I get it. I think I have like an Austrian, like, there's a part of me that identifies with that method of thinking, and Bitcoin sort of does align with that. I get that. Now somebody's like, it's all hocus pocus. This is garbage. Okay, fine. Like, that's your interpretation.
You have a little Austrian in you?
Yeah, I do.
Okay.
If I'm lucky.
Buy you dinner first.
No.
It's more portable than gold anyway. You can get it across a border where it's hard to get gold or cash out of the country.
Just don't forget the password. Whatever you do, do not forget that password.
And don't throw away the
little
key. And don't throw away the drive in the trash.
And what were those guys that stole like $2 billion of crypto out of South Africa or something here recently? I mean, they just walked across the border with that in their heads, right?
Yeah.
That's wild.
Somebody was telling me about a fine watch being a good way to get money across the border. I was like, that makes some sense.
Wow. Where do you have to put it?
Well, customs don't check your wrist, right?
Oh.
You died of dysentery.
Yeah.
And now, little man, I give the watch to you.
This watch.
But, that makes some sense.
That's funny.
Get like an expensive watch and go across the country or border.
The other thing I've been noodling on, this has just been in my brain so we keep having this conversation about like what derails, or at least I'm having this conversation in my head. And if you guys don't want to hear it, just please stop me. But so when Powell spoke, was it last week or 2 weeks ago when he did his speaking in Congress, and I was watching him on YouTube as much as I could take. The grandstanding, Congress grandstanding just kills me. So I'm like, we're not here to hear you talk about, China. We're here to hear from Chairman Powell. So he's speaking and he's talking about the unprecedented Fed actions around coronavirus. And it got me thinking, the last 2 times that we've had a very serious, market crash and a very serious economic stability, they were some of the most unprecedented things that have happened economically, right? So the housing crisis and all the derivatives and everything just finally blowing up and killing the system. And then after that, coronavirus. And in both of those instances, it was so extreme what was happening that the Fed felt the need and government felt the need to come in with money, right? Like come in and buy our way out of it, which is, I don't knock them for that. I would have done the same thing because in both instances I was, worried. And so I would have, taken extreme action. I wonder if we have a normal recession again. That's an open question. We might not ever have one, but I'm pretty sure at some point we probably will. Is the expectation people have in the market that in a normal recession that the Fed's going to step in and start buying MBS and start buying high yield credit? And I'm not sure that's the right expectation to have. I mean,
equity ETFs. I want them to buy some equity ETFs.
Exactly. Well, and
old Japan.
It got me thinking about Galbraith's book and the Great Crash. There was this belief, I think I brought this up before, there was a belief out there in the 20s that, the banks had stepped in under JP Morgan, 20 years prior when there was a lot of economic instability and that famously Morgan's playing, solitaire while he tells the bankers to work it out in the other room, and they do. So everybody thinks, there's a bailout. And in 29, unfortunately what happened is everybody expected there would be one. And then when it, became reality, there was not going to be a bailout. It just was like a complete meltdown. And I sort of wonder if is the expectation that that's always going to, I certainly don't have that expectation. I wonder if the average market participant just thinks it's not a big deal. Market goes down 30%, credit dries up, Fed's going to come in and start buying.
But remember the Greenspan put, there's always been not always, but there's been for a very long period of time as the Fed's got increasingly interventionist, it's become, I think that there's a widespread expectation that the Fed will intervene on every single wobble. Like if we're down 10%, Twitter is full of people saying, let's do it. Let's get out there. 10%'s nothing, And
then you have things like Bitcoin. That's what starts things like Bitcoin. Is people say, well, that's all a scam, right? And so then we're just going to create our own currency.
Congratulations. We just rediscovered moral hazard.
I just wonder if that's my thinking is that, I get the moral hazard. I'm just wondering, are they going to do it every time? Is it smart to bet they're going to do it every time? Because what if we have, again, I say a normal recession where we contract 2 or 3% on GDP, and so as I look in the world right now, I don't see it. I mean, all I see are job openings, right, at very high, income levels. That in a lot of money everywhere. That's the opposite of what you see in a recession, right? In a recession, you see very few job openings, and the wages stink, and nobody has any money, and nobody wants to put it to work. Right now, it's the opposite of that. I just wonder when that does eventually happen. I mean, how many? See, I was born in 1979. How many recessions have I lived through? I lived through the 80s, the early 90s. And of course, 2000.
Late 90s, yeah.
Yeah, late 2000.
Well, yeah, 2000, yeah.
Yeah, and then the recession going into September 11th caused, there's instability anyway, and then that caused more, and then financial crisis, and then now COVID, and they do happen. So that was just, I was kind of noodling on it. It was like, does everybody expect that? And if that doesn't happen, what does that mean? Anyway, somebody corrected me.
It's not a, the recession, the definition of recession is like 2 quarters of negative growth or something like that.
Right.
It's like, it's very modest kind of, you would expect in an economy that has a lot going on in it, that it's entirely possible that just through normal fluctuations, you could have 2 quarters of negative growth. And then does that necessitate a Fed response? Do we need a Fed response to every single thing that goes on in the market?
No, I think like we would arguably need a fiscal response, but that all depends on what you believe.
Yeah.
Well, I mean, it goes back to, do you want to allow prices to send the signals to the economy of what we value or we don't value?
Absolutely not.
No.
Right. Well,
I want somebody making those decisions up in the high tower. And
smarter people than me have pointed out, and there's a guy who pointed out on Twitter that when the Fed came out and said, well, we're now, our dots have us raising rates by 25 basis points in 18 months, and everybody's like, oh my God, it's like, guy pointed out, well, the reason you do that, and you do it so small and so far out, it gives you 2 options in the Fed. One, you get to test the market and see how the market responds, which is absolutely accurate. You haven't done anything. You're just saying you might do something. And then it also gives you room, if you need it later, to you can actually ease by doing nothing other than walking back your 25 basis points. You know what I'm saying? So you get yourself some room. I do buy the argument that the Fed is paying very close attention to the market's reactions to what they're saying. I think that's absolutely accurate. It seems like that's been getting more and more and more. The Fed is looking at the market. So maybe there is the perma put, maybe that's right. I was thinking about this. I was like, do people really expect that that's the case? Because it seems like a really stupid way to underwrite, because the one time it doesn't happen, I mean, you're going to blow up. Like you just...
The problem, though, is it creates that moral hazard argument, that reflexivity in the market, that the participants aren't just sitting here, oh, gee, if we fall over, gee, I hope we get a put. They're like, well, now there's a put. That changes how I behave in this market. I don't need so much downside protection. I just...
Left tail's cut off. Let's go.
Yeah. Now your risk is not catching the right tail.
Right. Yeah. No, that was the risk mid 2020 when the Fed stepped in with a put and the left tail was cut. The bigger thing that you did was that worked against you was just not catching the right tail. That's exactly right.
But that's what creates the speculative mania, right? That need to be, that FOMO, that need to be fully invested, that need to be in all of the stuff that's going up right now.
This is the Minsky's argument, right? Like that the stability creates its own eventual chaos and vice versa.
Which just seems to me to be, that's the case, isn't it? That's exactly what happens.
It's hard to look at it and not feel like that it's a pretty accurate description of how these systems behave.
But then you have that Fed in there. Like maybe they can just keep on catching it every time it rolls over.
It is kind of a sad thought to think like we could spend our whole lives worrying about this, that they won't do it, and we bitch about it until we're old men, and eventually, like when we're all gone, then it does finally fall over.
There won't be anybody in the market who's seen a crash.
No.
Yeah, for the record, I am not bitching about it. It has made me an enormous amount of money, so I am not complaining. Thank you, Chairman Powell. I'm not complaining about the Fed stance. It was, I was fortunate and flipped at the right time, so it worked really well. So I'm not complaining. I'm just wondering
what was the signal that you got that caused you to flip?
This is a very good story. So I got incredibly bearish. Thank you to Dan McMurtry. I know you're not watching. I wish you were. You are the man.
That's not necessarily true.
You might be watching.
McMurtry does watch sometimes.
Okay. Well, in the off chance that you're watching this one, Dan McMurtry is the reason I got really bearish. My when we saw the cruise ships disembark, I think it was in March, and it clearly was spread, and then it hit Westchester. My wife was like, this is pandemic. It's community spread. This is now real. And so it's not SARS anymore. I mean, this is something totally different. And so my wife gives me that, and I'm sitting there thinking about it. And then I'm watching, just reading Twitter, and Dan McMurtry says, well, I think it was South Korea, but it might've been Taiwan. One of those economies completely shut down. And so Dan just tweets out, he said, what does your economic model say when you put total shutdown. Nobody leave your house into it. Like, what does it say? Like, just out of curiosity. The answer is nobody had a model for that. I mean, for the first time in my investing career, you started looking at scenarios, and they weren't, it wasn't maybe your base case, but it was a scenario where revenue was zero, right? So Formula One, revenue zero. What does that look like, right? And so how long can you? And that's a scenario that was and the market, I think at that point was down, I don't know, 1 or 2% or maybe 3 off the highs. And so I started getting really bearish. And so I remember as I was actually traveling, I was going to Salida this last time I traveled, and I was with a couple of my friends, and we were all just having this conversation, kind of like we are right now, and saying like, look, the market's not ready for this. So we need to, we're going to sell as much as we can. Everything's not nailed down. And we bought some puts. I bought some market puts for the first time.
Went on CNBC and cried. Oh,
no,
wait.
That was the
Don't
bottom.
go at Ackman over
Don't
that.
go at Ackman. That
I
was
still
the
think Ackman.
We can go at Ackman
Sorry.
over. We can go at Ackman over
Said
a
it when
lot, but
he
not
did
that
it.
one. There's plenty of stuff to go after Ackman for. Not that one. That was good. I
I
actually
don't know who
agree
you're
with that
talking
one.
about. I was just making a joke.
So anyway, the guy I was sitting next to, Brian Lombardi, is one of my best friends. He said he's one of the perma bears. He's one of those guys who's like, it's always going to end. And so he looks at me and he says, Mike, you're the most like optimistic guy I know, which is true. I'm like a I'm a perma bull. He's a perma bear. And he said, the Federal Reserve, if that happens, the Federal Reserve is going to come out and they're going to pump so much money into the system, it'll make your eyes bleed. When they announce that first purchase, we're covering every short and we're getting long. And he said, I will not do it. I will give you 50 reasons why we're not going to do it at the time. He's like, you need to slap me in the face, punch me in the nuts, and tell me to buy stocks. And that's, in fact, when he said that, I was like, you're dead right. Like, once Powell comes out and says we're buying assets, and it doesn't even matter what the asset is, it makes no difference. Like, whatever the asset is that they're buying, just get long. And that's what we did. And we did okay on the down, but then when he said we're buying, I mean, and there was a couple months where it was like looking shaky, but even it didn't matter. I mean, that was the time to make a lot of money. I didn't get super, like, I didn't put a ton of money to work really until Bill Brewster. So Dan McMurtry gets the big shout out for calling the bottom, but Bill Brewster gets the distinction of making me the most money anybody's made me outside of a job. That Curate call was the one where I got really big. It was all because of that.
The only wrinkle to that, I think, I saw Tepper do his balls to the wall talk in 2009. And at the time I didn't believe it because I had seen through 2000, 2002, the Fed was firing the cannon all the way down there and it didn't do a thing. And so when he said it in 2009, I was like, well, maybe somebody's going to be right around here eventually. It could be this call. So in 2020, I feel the same way. Like, I don't think that Fed intervention necessarily means that the markets then just take off again.
Yeah, well, the markets follow earnings growth over time. I mean, earnings have grown, and then you've gotten multiple expansion too. So, I don't know. I'm one of these people that's skeptical that the Fed is the Wizard of Oz, and I tend to think that people probably pay way too much attention to it.
So my bet was, my base case last year always was
that said, it did matter a lot in March. I will grant you that.
I think there were two big drivers. I mean, there was the Fed, I think, was part of it, but it really, the Fed, it's not really about the money. And this is my personal opinion here. And again, over skis. So please understand that somebody will tweet at me and say you're an idiot. And again, I'll say I am.
That's going to happen anyway. Don't worry about it.
Right. It's definitely coming. So, but I don't think it's so much about, there's a big buyer for my assets right now. The two things you needed to get really, really bullish, you needed somebody to come in and say, it's fine. That's the number one thing. And then you really needed the numbers not to be terrible. So I would have been wrong if the COVID numbers that we were seeing in Italy came back in the United States and they were that bad. Like, I definitely would have been wrong. I got my base case always that we would be fine, because it's weird for me when people are like, this is going to be a nuclear meltdown. And I'm like, so play that out. Like, if it's a nuclear meltdown, do you have a bunker? Do you have like shotguns and canned food? Because I promise you, Bitcoin is worthless if it's a nuclear disaster. It's worthless. That doesn't do anything. Gold does nothing for you in a nuclear disaster. You can't eat it. It's heavy. It doesn't, like, what you want is penicillin. That's what you want. You want gasoline and penicillin. You don't want gold. So I was always in this camp that, like, we have to underwrite that it's going to be fine. I just don't know exactly how we get there, but I'm sure at the end, we're going to figure it out. And I got lucky because we did figure it. I mean, we all got lucky, in my opinion, because we did figure it out. But that you needed those two things. And it wasn't for the Fed buying it, the important part was that it's confidence. And that's my point. That's why house prices go up and why people want a home. That's why they remodel. That's why we buy assets. Like it's all confidence. And if you're
animal
confident,
spirits.
That's right. If you're, and that was the Fed coming in and saying, I will not let this blow up. Like it's the liquidity, right? That's what would have taken it completely. When Buffett said 2 years ago in the 2020 annual meeting, so there's about a week where credit markets froze, and my phone was about to ring. And that's what he waits on, right? That's what he waits decades for. He wants the call because he knows when you call him, he gets whatever terms he wants because he's the lender of last resort. He's got the most money and he's going to be the last one to go bankrupt of all of us. So when Powell came out and said that's not going to happen, so McDonald's put out paper. So senior debt, this is McDonald's, senior debt, they got it done, and it was like a 500 or 600 basis point spread and for McDonald's, which is insane. They got that done in March. That's what it cost. And 2 weeks later, they wouldn't have been able to do it. Fed comes out and says, boom, it's no problem. We're going to be buying all this stuff. All of a sudden, their spread drops to like, whatever, 100 basis points or something. And then they go out and what do you see? Everybody goes out and issues debt. And then what does management do? Well, we can survive because now we issued all this debt. And then everybody's like, oh my God, the Fed's standing there. Like now we got to go nuts. And then that's when you see people like chasing these crazy assets up. It's confidence. It's the animal spirits. That was why I got bullish. Could have been pure luck on my part. Probably was, but that's what got me bullish last year.
I think animal spirits has something to say in the short term, but it's very hard to predict. I think longer term, it's some other factor. But in maybe at tops and bottoms, it becomes animal spirits. I have no idea where we are at the moment, but there are lots of little indicators that I like to look at. Like I like that fear and greed index to tell you that fear and greed index did drop down under 20. That's a value stock geek idea, by the way. I thought that was a good one. Where that just because when you're in these events like March 2020 or other sort of bottoms, you not that you necessarily know it's a bottom, everything's in free fall, and you're terrified, and that's a good counter signal that you probably should be out there doing some buying. But it is also nice to have something that's just a little bit more quantitative that says this really is an extreme moment in the market. The only problem with something like that is, as far as I can see, it only goes back to about 2010. And I really want to see what that looked like from like December 2008 to March 2009, because that was just all extreme free fall through there. And I'll bet it was under 20 the entire period. So you probably bought early. Maybe you bought a quarter or two too early, but even then, I think that's okay to buy a quarter or two too early. In that, I actually think you could have bought a quarter or two too late, and you'd have been close enough to the bottom that your returns are pretty good.
My problem with all these is when I've had a couple of bites at that apple, and I do the stupidest thing, and I'm so consistent at it. I start buying like the easy, safe stuff. Right? That's what I do, and that's like this dumbest thing to do. My business partner Brian Jacoby's
ground
buying
zero.
Yeah, he's buying Carol's. He's like Taste. The Burger King franchisee. By the way, this is like a 5-bagger. I mean, in like 6 months, it was crazy. The guy's a lot smarter than me. I'm like, oh, look at these preferred shares down 8%. Like that's big. I'm like, okay, yeah. Good job, cool.
Yeah, I learned that when BP had the spill. I went and bought all of the stuff that was like surrounding, all of the the jack-up rigs and the everything that was out servicing it, and not BP. And what you should have done, or what I should have done, is gone in and bought BP as it was sort of the crescendo of the news when it was peak fear. That was the time to go and right to ground zero and buy it. Having said that, the counterfactual might be, well, the fine was so big it put them out of business, and that didn't happen.
Well, but there's an asymmetry. I mean, that's so I don't so much mind in that scenario where they're going to go out of business. Like I mean, you that's not an outcome that I would prefer. But if it's incredibly asymmetric and you say, well, the odds are 50-50, but it's 10-1 payout.
Yeah.
Okay. Great. Then you just size it the right way.
Yeah,
right.
That's right.
That's fine. You don't have to swing with 100% of your capital, swing with 5%, so anyway, I think it's the asymmetry of it. And that's where I focusing on the downside is kind of how I grew up. So always thinking about how much can I lose and try to lose nothing, because the only thing you don't want in investing, the only thing, as best I can tell, that you really don't want to do is get knocked out of the game. If you get knocked out of the game, it is game over. If you survive, you're going to do very, very well. So it's all survival. I think the guys who really think about the world, the guys who I appreciate how they think about the world, is they always look at it as asymmetry, and they're just looking for that asymmetry. Losing everything isn't a problem. It's not a big deal to lose everything on one bet. You don't want to lose everything, like everything, but losing everything on one bet is not a big deal. You just have to size the bet right. And if the asymmetry is there, who cares?
Yeah, it's a bankroll Kelly betting kind of approach to the world where you're always just putting up some portion of your bankroll rather than the whole bankroll.
I feel like Mr. Brewster is disagreeing with me. He's got this very
dude, I'm just pissed off at myself because I didn't fucking bet Eldorado Resorts and Restoration Hardware. I was too stupid. I held myself to the standard of you need like at least 5% of your portfolio, and both of those would have made me a lot of money.
5%. Big or small, no smaller than 5%. Otherwise,
yeah, I just didn't want to get it. I didn't want to get like cute, and I mean, I'm pretty proud of what I did last year, but those are two errors that will probably grind at me for the rest of my life.
You get another go at it. Don't worry.
You'll make bigger ones than that. Don't worry.
I don't know. Eldorado would have been a 10x.
Is that good?
You can make money on 10x, even if it's only 1% of your portfolio.
Mike doesn't get out of bed for less than 11.
Yeah, I don't. Yeah, that sounds weak. Sorry.
That's fair. It was scary though, no doubt. I mean, the only reason that it was there is that it was a casino that had bankruptcy risk, and I didn't feel like taking that shot. But in retrospect, I think I underestimated the amount of policy response. And next time, if they come out with some sort of bazooka, I may take a little total risk off, but put a little more risk on some of the scarier stuff.
I think the thing that investors should, if you're a single stock picker, if you're not a single stock picker or a business analyst, I think the plan is very simple, right? You just invest every month. Every month you just invest in an index, right? You don't pick a stock. But if you're a stock picker and you fancy yourself at really good at, or at least very thoughtful about underwriting risk, I think you have to have a framework going into crisis, right? So Cohen said in an interview, Steve Cohen said in an interview you just did, he said, well, I lean into pain. It's his framework. Pain is where I want to go. So show me the pain. I'm going to lean into the pain. It doesn't bother me. It focuses me. I'm more excited when things are tough, right? I think in 2020, the key was if you fancy yourself an investor and you really want to try to make money in times of stress, right? So you really want to underwrite credits when you're sort of a lender of last resort. You have to have a mental framework, because I'm not convinced maybe one or two people in the world are able to emotionally divorce themselves from that kind of pain. I am not one of those people. So for me, it has to be I'm waiting for this. And when I see it, I'm going to do that. I'm going to do this, then I'm going to do that. And it's almost like you just got to go on like autopilot. Like do not give me the new, I'm open to new information, but do not change my plan. This is the plan. This is what I'm going to do. And it kind of keeps you focused. Like, what are you waiting on? And when it happens, I see my uncle, I love the guy, Uncle Mark, I love you. I know you're not watching. The guy sat on cash from the .com bursting. He sat on $750,000 in cash because he was convinced that the world was going to explode post the .com burst. Okay. So when the great financial crisis hit, the guy was like, I told y'all, like, I knew it. I told you it was coming. Well,
yeah, you forewent 9 years and probably didn't even bet then.
Correct. So, and guess what? 2020 rolls around and COVID happens. And then he's still got $750,000 in cash. And then COVID hits and he calls me and he's like, this is the end of the world scenario. And I'm like, no, this is when you finally get your shot to it. This is what you've been waiting on. And he didn't invest, so he calls me in April of 2021. He's like, you take my money, you buy whatever you want to buy, you go take my money. I'm not doing this. I clearly don't know what I'm talking about. I'm like, that is in my mind, it's totally okay if that's the game you want to play, but you got to have that framework going in, because you'll always talk yourself out of making the decision to buy. So
fear is real, right? The fear that everybody else has. You're a sentient being. You can look out there and see, like I didn't experience the .com other than as an employee, but the 2007, 2009. I mean, there was some suggestion that was going to bring down the financial system, and it's Buffett was out there saying that too. So it wasn't
not some
mere mortals only.
There's a real good chance.
Meanwhile, if he had even in 2000 put his money in the Qs, he'd be up 3.5x. So he's been wrong on the end of the world and lost a shit ton of relative wealth. That's a hell of a way to be right.
I think that cost $2 million. That's what I mean. At least it might have cost more, like $4 or $5 million.
In today's world, now that lumber's through the roof, it costs more. Like your relative wealth is screwed. Who cares about what you have on, like your scorecard tells you? It's your purchasing power is all that matters in life.
I'm so happy you brought up lumber. That's a perfect segue. Looks like we have a few more hours. We can get into that.
I do have a little veggies.
Yeah, JT, go.
Oh, we need Jake veggies.
Yeah, and it dovetails nicely. So even though we did no planning on this, so this is another little segment from that deep survival book that I've been reading. This will be part 2. So I don't know if you guys know much about aircraft carriers, but to call it a boat is almost a misnomer, because you imagine taking the Empire State Building and tipping it over on its side, and you have 6,000 people who live on it full time, and you displace 95,000 tons of water. And this thing can go like 30 miles an hour over the ocean. Exact speed, not disclosed because that's classified information, apparently. But
I like that that's what they'll classify.
Right. How fast this thing can go.
Yeah. As if it matters.
No.
Just got to lead it a little bit less or more. So,
and you use steam from a nuclear reactor to basically catapult a jet off of it. And then you could come in and land on this same little thing, and this little hook basically on your airplane catches a wire and just stops you, like 4 Gs like that. But so one night in this operation, they're running operations like the pilots are practicing their taking off and landing on the carrier. And there's this pilot who's coming in on approach, and he's heading in towards the deck, and he lets his descent rate get too low and too slow. And sitting on the deck is this guy who's called the landing signal officer. And he has like one of those big phones that looks like an old cell phone. And he's got this thing called a pickle switch in his other hand. And what that is because it looks like a pickle, but he pushed the button on it, and it will basically like turn on these like red lights flashing on the carrier that says like, do not land, like you power up, take off. Let's try again. Like don't come in. Well, this guy's coming in, this pilot, and he, they're telling him, hey, you're too low, add power, abort. Like he turns on the pickle switch, and this guy comes in and like, he's just frozen. And he comes in and he smashes into the back of the aircraft carrier, and it shears the plane in half. He goes tumbling across the deck, still strapped into his seat. Sparks are flying everywhere. Fortunately, his co-pilot, not as lucky. He's just basically smeared into the back of this aircraft carrier. They talked to the guy after and like, what happened? Like we told you, like, we're telling you, pull up, you're too low, you're going too slow. The lights are flashing, everything in your plane is going off. And he says, I literally couldn't hear anything. I just had this overwhelming sense that I had to get this airplane down. And like, he had all of his senses were, tunnel vision, contraction of all of his senses. And what's happening there is that actually his amygdala, this fear response, is limiting the bandwidth of what he can see. Like he literally could not hear this landing signal officer telling him to pull up, to, don't land. And I think that we can get into some of the same problems when we get gripped with fear, and it's a survival thing, right? Like we evolved to survive on the savannah, where your reptilian brain would just say like, okay, run away and like find somewhere to hide, like, or get down off of this, rock, or, this lion's chasing you. And the fact that we're all here meant that was a successful strategy, but it doesn't fit our more modern world now, where you need that executive function. You need that neocortex to tell you, actually, you can't, you don't want to just get down on the plane. Like that's going to be very dangerous. You need to accelerate and take off. And, we're at a mismatch with our environment from our evolution. And that same thing I think is true in markets, where if prices crashing cause a fear in you, you're going to be going back to your reptilian brain. It's going to be taking over. Your input of what you can see is going to be constricted. The Navy has this saying that, once you get up there and you get afraid, basically your IQ rolls back to that of an ape. And, these guys they're well-trained, right? And they're well-prepared, but yet that old part of your brain takes over in a fear situation. And so going back to like what you said, Mike, about having a plan before it happens and holding your feet to the fire, like the execution of the plan, even when you can't see very far, more than 2 feet in front of your face in that fog of war, I think is extra important. And if you're waiting to come up with a plan until you're actually in the firefight, it's too late, right? Like you're not going to make the right decision. Your uncle probably was waiting to make a plan in real time. He didn't have it set aside ahead of time when he had the function of his neocortex to work with. And he's waiting till his ape brain is the only thing running the show. And by then it's too late.
Yeah.
Great veggies, JT.
Very good veggies.
Just try not to crash into the back of the carrier.
Yeah. Well, it's worked out worse for the co-pilot. So I know now. Be careful who you choose to fly with.
I know that feeling that, you're just trying to concentrate. You just need to shut everybody else out so you can get the thing done, even though everybody else is trying to help you and you would have been better off listening. I definitely know that feeling. Folks, that's coming up on time. It's I only contracted Mike for June 2021.
Checks in the mail, Mike.
Mike has a standing invitation to come back on anytime that he wants to. Just so folks, if you want him back on, send a note to Mike because he's always welcome.
Well, we're taking next week off. I'm going to be in Montana. So I will not be receiving wonderful messages. I get it's the best vacation. There's no Wi-Fi. There's no computers. You have to drive 2 hours to town to be able to use a computer to check email. So, and no one can call me. You have to call so I'm going to leave my
bro.
my
You're going to have
hotel
a
number.
satellite checking lumber. Don't lie.
I'm going to give there's two people. I'm going to give 2 people the number of where I'm staying. One is Bill Brewster and one is Kyle Sermonera. So if you want to talk to me, you got to talk to one of those 2 guys.
I bet Stinson gets it too.
But yes, Stinson Dean is definitely going to get it. But it's been fun, man. And when I'm gone for a week and kind of unplugged, if I can muster up some interesting things to say, I'll definitely come back. I've had a lot of fun.
Perfect.
I feel like I'm crowding you guys out, but I've had a lot of fun. So
I enjoy it.
Great. And so, folks, we're all off next week. So we're going to celebrate July 4th, and then we'll be back after that as 3 or 4. We'll wait to see.
Watch Class Action Park on HBO. It's fucking crazy. It's a great documentary. Until then, take care.
Thanks, guys. We'll see you.
I guess.
Oops, hang on. I always do this.
Always. It always happens.